All right, people. We haven't been given a green light, but I'm going anyway. Oh, I got a green light. After I said, can I have a green light? The biggest green light. Hi, everybody. I'm Kelly Gay. I'm on the board of TAG. I'm also associated with a couple other organizations here in town, including Venture Atlanta. I'm the moderator for the day, for this panel. But I want to make sure and let you know how this is going to work, and then I'm going to briefly introduce our panelists, but they're going to, in more depth, introduce themselves. So we have a fabulous panel here. Just a fabulous panel, including our Hall of Fame winner for today. And I've got some questions to get the conversation going, but we are going to leave time for questions from the audience. And honestly, I don't care if you have a question related to something we're talking about that you want to ask, go ahead and raise your hand. So it doesn't all have to be at the end, is my point. We'll keep it pretty casual. Not only that, I'm going to have them speak as much as possible, including introducing themselves. And if they have something to say on the topic, a question, they will, and if they don't, they won't. So let me introduce our panel very quickly. So this is Brian Daly, over here, right to my left. He is the CEO and the co-founder of GROUNDFLOOR, as well as an executive and a board member for a number of companies, and has founded companies before GROUNDFLOOR. Thank you for joining us, Brian. We have David Cummings. You all know David. David is our Hall of Fame winner for this year. Congratulations on that, David. And we will hear more from David later today on that. He is also the founder of the Atlanta Tech Village, co-founder of many companies, founder of other companies such as Pardot, previous to that, a board member on many, many organizations. You'll hear more from David during his Hall of Fame presentation, as well as a brief intro here. And then we have Jim Douglas, who is a partner at Fulcrum Equity Partners, board member on a number of organizations, CEO for a number of companies. So please welcome your panel for the day real quickly. Good to see you guys. So I'm going to sit over here and I'm going to start with just as you introduce yourself, tell us a little bit about how you think of innovation, how it fits in your thought process as an investor, and what you're looking for in terms of innovation. So let's start with you, Brian.
Sure. My name is Brian Daly. I'm co-founder and CEO of GROUNDFLOOR. When I first built my first startup, I was in grad school in 1996, and I did it as a project to just play around with web technology. And at the time, you actually had to build websites in, like Notepad with Visual Basic Script. And that was me going to law school and working late into the night, which was very entertaining for my new wife. She really loved that. But I'll tell you, since then, I got bitten by the internet bug. And what we've seen in fields as diverse as philanthropy, politics, finance, which is where GROUNDFLOOR is the rise of people believing, whether they do or not, doesn't matter. They believe and they act as though they have the power to make their own decisions and to do it well. I'm interested in that as it links to innovation, because that's what I pay attention to. I really drink the Kool-Aid of internet democracy, and I think internet democracy is delivering new innovations from new people in new ways, in ways that we just couldn't expect, and I think that's just really exciting.
Great, my name is David Cummings. Excited to be here this morning. From an investor point of view on innovation, I think of it in terms of team, stream, and not a meme. And so team is obviously the people, the entrepreneurs behind the idea. The stream is what's changing in the world, what needs to occur, what type of innovation is happening in other places that can support what this entrepreneur wants to do. And then not a meme is the idea that it has to be a must-have. It has to be something that's truly important that needs to be done. On the not a meme side, my favorite example is a meme that I saw a few years ago. You have this picture of Chuck Norris, and it says, Chuck Norris, he eats Chick-fil-A on Sundays. And so from an investor's point of view on innovation, team, stream, not a meme, I want to see where the world is going, but hasn't been delivered yet. And I want the innovation to solve that.
I'm Jim Douglas with Fulcrum Equity Partners. Ours is probably a little more fundamental because of the stage we come into a company. We're typically getting in 2 to 3 million in revenue, so on the low end up to 10 million on the high end on the technology businesses. So we're looking at really trying to understand customer-driven innovation. So we're seeing businesses that have customers, and it's the roadmap that the individual is pushing towards. Is it kind of meeting what we're hearing from those customer needs, and then also the leadership team, the ability to lead that customer beyond their own imagination, because they always don't know. But you really want to know that from our perspective, that it's tied heavily to the feedback you're getting from your customers. And I think it's honestly something that probably doesn't happen early enough. People build and they're a little worried to get out in front of the customer. It's a little scary to get out in front of the customer. Best thing you can do is get out there, take a risk. They're gonna lead you along the way, and if they're not, it's probably not that great an idea to begin with. And then the only other thing I'd add to that is, beyond innovation, is how broad can that idea be? Can it turn from a product to a company? So many times you see, oh, that's great innovation, but that's a product. It's the roadmap and the vision that the executives can articulate, and you can hear from customers, is broad enough to build a powerful company.
Thank you. Thank you, guys. Let's stay on the concept of the thought process you have behind innovation. When you're thinking of innovation, is it a particular thing you're looking for? Is it, and Jim, you touched on this a little bit, is it a business model? Is it a product? Is it the capability or the general tenor of the team? And is innovation an actual criteria to you as you look at investments, or is it something that permeates an entire decision?
I think about it under a couple different lenses. One of the lenses is around, is it an incremental improvement or a revolutionary improvement? Is it 10% better or 100% or 1,000% better? One of the most common reasons we see entrepreneurs fail at the Atlanta Tech Village is that they've built a mousetrap that's only a little bit better. It's only incrementally better. When we see entrepreneurs build products and solutions and inventions that are 10 times better than what's out on the market, we see a completely different experience. We see customers begging to buy the product. We see customers begging to have certain features added after they've already committed to paying for it. And so this idea of 10% better or 10x better, I think, is one of the most important considerations from our perspective on the investing front.
Yeah, I'd just add to that, I agree 100%, and the central thesis to that was customer driven, right? You have something, you think it's in a good place, but is it, when you really get out there and talk to the customers, is it it's a little bit better than your other guy, or a whole lot better? And then back to, not to repeat myself, but back to that, how much further can you take the customer with that product roadmap? I think that's an important analysis.
And I think about it slightly differently, because I think when you're looking for customer feedback and customer uptake, you have to ask which customers at what stage of what kind of arc. And the trouble with something like Airbnb, if we just take that as a famous example that I think people will talk about in terms of spotting innovation, the first product, which was couch surfing, across the world at conferences, it's not clear what the customer demand is on a broad basis for that, right? And a lot of people doubted it, which is why Airbnb is in a lot of investors' anti-portfolios. So the formula that I think about when entrepreneuring or getting behind an early stage entrepreneur, and that's where I like it, is somebody who has an expansive vision that sounds ridiculous, but that they're passionate about, and that from a position that they can, litigate for. Because they have to litigate in the world to make that vision happen. It doesn't happen by itself.
Clearly, Brian went to law school.
I did. It's guilty as
Litigate
charged.
is a strange word in the context.
Guilty as charged. And it is litigation. I mean, it's hard. It's a battle, right? To support your vision and to prosecute the case for your vision. And there are a lot of defendants who want to defeat you in your vision.
I'm going to start prosecuting the case for my valuation. I never thought about it like that.
Yes, I'd love to litigate against you on that fact. Let's talk about that.
Litigate valuation.
But I think the important point is there a narrative arc that is going to rally talent? Is there a narrative arc that is going to bring investors on board who are willing to take a flyer on that idea? And yes, there has to be some customer somewhere who sees it and values it and wants the features. But the real question isn't the customers you're getting now, because that's 2x or 3x. The question is all of these customers that you can't even predict that you're going to get in the future, who don't even know what they want yet. And that's the magic. That's the 100x investment. And that's what I get excited about as an entrepreneur. If I'm going to spend 7 to 10 years of my life being involved with or building a company, I'm doing that. And I think you guys agree with that.
Another lens that I like to look through from an investment point of view on the B2B side is, does this product or service fall under one of two categories? Category number one, mission critical. So is this something that is truly required to run the business? The best example I heard was from an entrepreneur last year. He said, during the Great Recession, we had our software in a number of YMCAs throughout the country. And during the recession, their funding went down, and they told me that they would go ahead and not pay their electric bill before they would not pay for their SaaS software. So think of that litmus test. Would your customer not pay to keep their lights on because your software is more important than that, or would they pay to keep the lights on first? And so that was really powerful. That was a really compelling story for me. The second lens I like to look at is the product in the path of revenue? My co-founder at Pardot taught me this one. He's the current CEO of the multi-billion-dollar marketing cloud for Salesforce.com. And this idea of being in the path of revenue is, does your product unequivocally help me make money? If I turn your product off, will I make less money? And so those two lenses are very important to me. Mission critical, does it pass the electricity test? And in the path of revenue, if I turn your product or service off, does my revenue go down? And if you can answer yes to either of those problems or questions, the opportunity for success is much greater.
All right, you all can sense they have a lot of passion about that last topic. In my conversations with the team before today, they also had a lot of passion about the role customers play in innovation. And you all have touched on it already. You've all talked about the fact that customers really play a critically important role if you let them play in innovation. I'm just going to let you go off-road on this one for a while. Please talk about that.
So from the Pardot experience, we had a crucial innovation conversation. When the product first started, there was no email marketing capabilities at all, right? So we did landing pages, we did microweb analytics, we did lead scoring, CRM integration, forms, but there was no email at all. My co-founder, Adam, his previous job before we started Pardot was being the spam king for Holiday Inn. So on behalf of Holiday Inn, he sent out 10 million emails a month, and he knew the email world cold. Deliverability rates, inbox challenges, everything you can think of from a spam and email deliverability perspective. And so with Adam's background on the Pardot side, we were very averse to becoming an email service provider. But the customers kept telling us that the most important thing we could add to the system was native email capabilities. And so it was a real challenge internally. And finally we said yes. Finally we said we're going to go buy a bunch of email servers. We're going to figure out how to do deliverability. We're going to play the inbox games. We're going to pay the taxes to Return Path and others. And it was the best decision we ever made as a business. But leading up to that, it was extremely difficult to make that decision internally. But in the end, it was the right decision.
I like that story as a fellow entrepreneur. I can appreciate how hard those calls are. When we started Ground Floor, very similar experience. We thought we knew what people might want to invest in from all of the customer development that we did. And we went out and placed Facebook ads to try to attract investors. In fact, we moved our company to Georgia to do this here, because Georgia it was one of 2 states that had the Invest Georgia exemption. And we needed customers to test the idea that people would invest in an unknown product in an unknown category from an unknown company. It was pretty scary. And we went out on Facebook and we kind of got people excited through these ads. I placed them myself. That's what you have to do as a co-founder. And we got a wide variety of responses. Everything from like, get this scam off of my page. This is, you're the next Bernie Madoff. A little scary. Pyramid scheme, all in capital letters. We got a lot of customer feedback like that. But we also took on customer feedback that told us a lot more about what it would take to be successful with this product. And what we had to take on board, kind of like you going native with email, is we had to go native with asset management, which once we hired somebody who had 30 years going through ups and downs of cycles, teaching us about what was, and still an executive with the company 4 years later, about what was required to do asset management. It's like going native with email. It's like a whole, it's people, it's all these manual processes, it's foreclosing on properties, none of this stuff that I was up for coming from the wireless industry into real estate. You mean we gotta buy these houses, manage them, complete them, list them sometimes, and we have. But we had to take that on in order to deliver on the promise for investors, our customer, and what they wanted and what they needed to feel confident about this product. And that's made all the difference for us, actually. That's why we have such a low loss rate in a otherwise very risky category of investment real estate.
Yeah, we only focus on B2B, so I don't really have anything to say on B2C, but B2B customers love to talk to you. I mean, it's the easiest thing, and it's crazy how...
Do they call you a scammer?
Yeah, exactly. Well, I haven't told them I'm going to litigate them yet. I'm going to try that. No, they love to talk. And I say this from operating businesses, and I watch our portfolio companies now. It's right there in front of you, and they're not always going to be right. You're going to be the arbitrator of a lot of information, but it allows you to get, both these examples you guys talked about probably expanded your TAM significantly, right? So it's not just about the product features, it's about the TAM that moves you from a product to a company that's big enough to care about. So it's sitting right there in front of you, and you got to use it.
And I like that example because now that I think about it, we are a B2C company in that we sell to individual retail investors, who qualified and offering the SEC laws are ready to do that. But we're also a B2B customer or company in that we make loans to these small businesses that are renovating, renting out real estate. And precisely because of this integration that we took on, we didn't want to. We've moved into new product categories and gotten to know these customers better, and the customer value has increased 5-fold, largely as a function of that, because there are new opportunities to fund even the same property, right? Because we're in that asset management business. And so I agree, if you really deeply engage and pay the taxes of doing that, it's hard to do, but it pays big dividends. Yeah.
Another example that comes to mind is when I bought the Atlanta Tech Village. So truth be told, the original idea was to buy the building and test the market, see if there was demand for entrepreneurs that wanted to cohabitate with other entrepreneurs. And so bought the big building, went to IKEA, spent $40,000 on IKEA furniture, which is really hard to do if you haven't tried.
Did you put it all together?
We did pay to have them assembled. That was a good chunk of it. And so we outfitted the entire second floor. It was totally empty, put a bunch of IKEA furniture, and said, come one, come all for entrepreneurs. And by the end of that first week, we had filled up 20,000 square feet of office space and a rundown building in Buckhead with entrepreneurs. And so there was so much customer demand that it gave me confidence to kick out the 17 traditional tenants in the building so that we could renovate it as quickly as possible and fill it up with entrepreneurs. And so getting that first initial product market fit that yes, entrepreneurs wanted to be around other entrepreneurs, was really a magic moment for me to go ahead and say, we're going to make this entire place, as quickly as possible, the best place for entrepreneurs to succeed.
And thank you for doing that, David, because when we landed in Atlanta, 4 of us moving from Raleigh, just living in an Airbnb in Morningside Heights, Tech Village was the perfect place for us to land, even though the 3rd floor wasn't quite ready yet when we got there. But thank you for doing that.
So that was another learning. We should have kicked out the tenants and renovated instead of playing musical chairs.
We were fine. We had fun. We loved it.
It was a good learning experience.
Everybody took good care of us there. It was awesome.
All right, well, as you can see, they have a lot of passion around that topic too on customers. So especially after all of us sat through Duncan just a minute ago, nobody in this room wants to not be innovative or not be creative or views innovation as anything as good, but there have to be times that innovation in a company is not a good thing. Educate us on how and when that might be.
So that's an extra tough one because nobody likes to talk about the failures as much as we like to talk about the successes. So on the failure front, one of the lessons I learned early on, we had a very successful product, we were looking to grow our TAM, and so we had this idea for another product. We were going to make it easy for companies to build online communities. Think about message boards and chat rooms, think about Reddit, but clean. And so we had this idea that we were going to do this crowd, we called it ecrowds.com. And so we spent a bunch of time and money, we were going to grow our TAM, and we were going to build online SaaS community software for businesses to run their own communities, much like what Jive Software and others are today. The challenge was we had this other product that was doing great, and so all the resources, all the best team members, everybody was focused on the product that was paying the bills. And so we hired some junior people and we put some other resources on this nascent product that we really hadn't fleshed out the customer demand at the time. And so we were doing innovation, we were building software, we were trying to expand our opportunities. And it was clear that everybody in the organization cared about the mothership product and nobody cared about this secondary product. And so my story of woe from an innovation failure is not getting alignment, is not getting the resources. It helps me better appreciate the story of Steve Jobs getting the building down the road to build the Mac, to separate the teams, to separate the resources. I learned that experience firsthand, and that's my innovation failure.
I just witnessed one, and I won't talk about the company name because it wasn't an Atlanta company, but they were dealing with a new innovation. They had a really fantastic product. The company's going to be wildly successful, but the CTO was interested in this new world. It was around RPA, and I kind of watched it evolve to exactly what you were talking about, where the internal organization totally turned against it. It was his puppy. Whether it should have happened or not, we ended up stopping it. But whether it should have happened or not, he probably didn't get to the right place because he never gave it a shot because it wasn't pulled outside the organization. Everybody's looking around going, why in the world would we not just take advantage of what's in front of us? And I think that we end up with the right decision, but it's pretty hard in a business that has a really strong product to get the team motivated behind something that would be considered skating to where the puck's going. It takes a lot of leadership and risk a ton of disruption, and it's just frankly probably more risky to do than most people would want to take on. So the only way to accomplish it is what you said, is move it outside the organization. I remember in the check-free days we did this in Little Skunk Works because we had the same problem. It's always been, this issue's always been there. So you got to isolate it and figure out how to motivate it outside the organization.
I think our story with this along those lines is, we often think about innovation as just being with a product, right? It's a new product, and we've had our experiences with that too at Ground Floor. But another place where we've realized that we need to innovate over time is in our channel for getting the product to market. And a lot of great technology businesses, you don't read about it because it's not as glamorous, are built on channel. Channel innovation, channel economics, channel insight, channel execution. And we realized 2 or 3 years ago that there was an opportunity to innovate in the way that our loan product, our capital supply product was delivered and how it was managed. And we ring-fenced a team. You know, we took some of our best and brightest and we put them on it. And I mean, they crushed it in Atlanta. I mean, they quickly went from nothing or just, 5% of our revenue to about 20% of our revenue in very short order. The hard thing was trying to figure out how much of that was due to the model versus the location we were in versus the talent we had on it. And if you can't replicate the innovation, and that takes money, talent, discipline, leadership, it's not going to go as far as you should. So this also depends on how you're capitalized. Our capital market strategy, aligned with our mission, has been to raise money from individual shareholders who are our customers. So every year, we set our burn rate based on, you guessed it, how much we forecast people will invest in the company on the platform. With 3,200 shareholders now who own 20% of it doing that. But the consequence of that is we can't really afford to do the moonshot project that, if we had a $10 million or $20 million investment from a growth equity firm, which maybe it's time to go do that, we could fund those moonshots. And so I think when you're balancing these trade-offs, innovation for innovation's sake isn't the thing. Are you innovating in product? Are you innovating in channel? Are you properly staffed and financed for that innovation? And one of the hardest things we had to do last year was shut that project down. We shut it down. Now we ended up doubling our revenue with the core product just by being a hedgehog and focusing on the product, right? And doing it the way that we've always done it. Revenue grew 112%, just doing that. But we also yearn to get back to that innovation in the channel, and I think we will when the time comes. With that timing and aligning those forces is incredibly important if you're going to be successful at it.
I'm glad you said that. The other thing, so we invest in healthcare services businesses and B2B SaaS software. I knew nothing about healthcare services 7 years ago when I joined Fulcrum, but innovation in there is, you don't have a whiz-bang piece of technology. You might have an innovative delivery, like an addiction treatment, how your program that you run, and the service that you provide, and how tightly you manage your population. Those businesses, my point here is you can create great businesses in the service arena that have very little to do with what we would call innovation. So there's a lot of ways to create great business. And I've witnessed that firsthand. I had no idea about these kind of businesses before I walked in.
All right, people. I have one more question before I turn it over to the audience, unless you all are ready. Does anybody have a question? Mr. Reed.
I'd love to hear your views on, you could see innovations like 3D printing or Internet of Things. When is too early and when is too late, and how do you know?
So for those who couldn't hear the question, with a wonderful prelude to it, but when is too early, when is too late, and how do you know?
The short answer is you don't. The long answer is the biggest success stories are the ones who timed it just right or had the staying fortitude to muscle through when it wasn't the right timing to be there when the timing was right. So going back to our Pardot experience, we started Pardot in 2007. Happened to be a great recession, happened to be a really challenging time to sell software. It proved to be a great time for recruiting talent, for recruiting people, because unemployment was so high. But in hindsight, our timing was perfect on the innovation and technology side. The big stream, the big wave that we were riding with Pardot was the shift from offline B2B ad spend to online. So think of all the businesses out there that were buying full-page magazine ads and newspaper ads and billboards and trade shows and shifting those dollars online. Banner ads, Google ads, direct response ads, email marketing, everything else. And so there was a big stream, a big trend taking place of shifting offline ad dollars to online. Pardot and the whole marketing automation arena was really the catalyst, was really the vehicle for marketers to run campaigns at scale and demonstrate the ROI. So we started in 2007. By 2010, we had 100 customers. By 2012, we had 1,000 customers. And so the market really started to take off around 2011. So we started 4 years prior, but in those 4 years, we were able to build a business that had a few hundred customers, that had the infrastructure, had the technology, had the talent. And so when the market was ready, we were ready to capitalize on it. In hindsight, if we would have been too early, we might have been worn out by the time the market had arrived, and if we'd been too late, of which there were a ton of entrants once it was clear there was a market, but they couldn't catch up at that point. So in that exact example, 4 years is your answer.
Or customer driven. I mean, what you're saying is I had enough customers that were interested in what I was doing, and then you thought you could scale the market off of that, right? Mine would be, or you're back to what we talked about earlier. Are there enough customers that you can get enough data around the dog eating the dog food to see that what you're building really is solving a problem that's meaningful to them? And then too late, not to be short, but it's just when too many other people are already there. I mean, right? It's easy, pretty easy to say that, but that's the obvious one.
I have two early stories. I went off to England in 2004 to be part of a management team funded by Bessemer Venture Partners with a Series A to bring real money multiplayer poker to your flip phone. That was the thing. Now, great technology on the back end. I loved it. Loved the investor. They put a pretty good sized Series A for that time into the company. And I was pretty excited about it. I mean, I got to play poker, for work. And it was customer development. It was great. I really enjoyed it. And it really raised my game too. Watch out for me at the poker table. Just kidding. No, I don't know what I'm doing at all. But in that case, we didn't know that the iPhone was going to come. I mean, we were in Europe, so we thought Nokia Series 60 was everything, right? Does anybody even remember that? The Nokia Series 60, we all had one. But we were developing for that platform, and little did we know, Apple was going to show up with a phenomenally successful ecosystem by 2010, and we had spent all our venture capital. So once again, the timing, not only when you're executing, but when and how you're funded matters. So in that case, we were too early, and I learned a good lesson watching, right-hand guy to the CEO, watching him spend all that money, and I was wholly in favor. Oh yeah, let's spend it. Well, when I started Ground Floor, a very different idea. But even then, I felt it was too early when we were sitting in, month 17 of what was supposed to be a 3-month or a 6-month process to qualify our offering with the SEC, and I definitely felt like I was too early. Fortunately, we had some very patient shareholders, and we had Georgia, moving here allowed us to kind of survive in pilot mode until that offering was qualified. And sure, once it was qualified, we raised our Series A and we were off to the races. But again, the capital that you raise, who you raise it from, how much you raise, and how you spend that in relation to the time of your innovation, the grit of your team, has everything to do whether, you can overcome, I don't know if you can overcome being too late. I don't know. That's never my error. Never too late. I'm just not interested if it's too late. But being too early can be managed in a lot of situations if you just structure it right.
Please.
Can you expand on that, on how do you mitigate being early, how you operate your company in pilot mode?
Well, the way that I did it when we were here in first, we moved to Georgia. So we said, we're going to declare defeat on this, and we're just going to go there, and we're going to sit in that ecosystem where all of our customers are. And all of our people were from North Carolina. I built my previous startup, Republic Wireless, in North Carolina. So it was a pretty tough move to just pick up and go. But the most important thing we had in order to mitigate that was a group of investors who bought in from the get-go. And we were very careful about managing expectations with those investors. And they were, they understood what we were doing, why we were doing it, and how we were spending that money and why we were spending it that way. And I think probably the number one thing we did was investor alignment, making sure that they were on board with the mission and the vision that we had for what we were doing and what it was going to take to get that to the requisite milestone to raise real capital. I think we only raised, through a string of fundraisers, convertible notes and whatnot, I think we had piled up something like $2.6 million over the first 18 months before we raised our Series A, and that got us through.
It's a really important question, though, and businesses can only go at a certain speed. You know, try to understand the market that's available to you. Like David, you talked about your business going from 100 to 200, and then all of a sudden 1,000. Well, knowing David, I guarantee you he was capitalizing for that 100 to 200 and not capitalizing to go to 1,000 before he needed to. It's like too many times we overcapitalize businesses and try to push them faster than their markets are ready. And you can, if you just pay attention to it, you can still build a good business smartly over that time period. And if you've done enough research on your market and listen to your customers, it'll come. The biggest mistakes we see in our portfolio are people that, and you know, just say, why'd you do that again? I've said that myself. But people spend money too fast trying to force something that's not ready to happen at that pace.
Well, and I'll add to that and say, we were in an industry where we were I joked, we were the smallest, slowest growing real estate crowdfunding company in the industry. You know, everybody else was raising tons of capital, you know, hitting major milestones. I mean, they were just crushing it, right? And here we are. It's very humbling. And you have to be humble and patient and just dedicated to the cause. We knew we were doing something different. And we just had to wait. And now, you know, not true. Now we're one of the fastest growing and I think most differentiated companies in our space.
And to add on to Jim's point, one of the pieces of the venture capital world that most people don't understand or know is that the majority of venture-backed startups don't return the capital invested in the business. So think about that. Company raises $10 million. The majority of the time when they raise $10 million, they don't sell the business for $10 million or more. So we have power laws. We have companies like Facebook and Google that return such amazing amounts that they pay for the whole industry. But the majority of venture-backed startups don't return the capital invested in the business. And so there's an old adage that more entrepreneurs die of indigestion than they do of starvation. And so the idea is that they try to do too many things. They try to do things that are unnatural at that time in the market's development. And so the entrepreneurs that can find the fortitude to stay until the market's ready do have much greater opportunities. But again, raising capital is not the be-all, end-all.
Are there examples of where, as investors, you've had to innovate to help companies get to that next level, or so you can attract companies to take your money?
So the question was, are there examples as investors that you've had to help portfolio companies innovate to get to that next level?
I guess as investors to innovate, because you have to have a value add for, unless it's just, I got a check, which I'm assuming it's not. How you help them, I'm assuming it's coaching, but is there things that you've had to do differently or innovate to attract companies to you?
Historically, the market has been very favorable for successful entrepreneurs that want to write a check. And so it continues somewhat to today, but today there's a lot more investors that are willing to write a check that aren't as value add. And so it's really, figuring out if the value add that you perceive to provide to the entrepreneurs matches up with the value add that they're looking for at that time. But it is a really challenging market right now because there's so much money on the sidelines looking to be put to work, especially searching for yield. With the Fed cutting interest rates again, the search for yield is going to, the pressure on it's going to increase even more. So it's an interesting time right now.
Okay, last question, and we have just a couple minutes on this. Your favorite innovation story that you have been involved in, either as a board member, a founder, a co-founder, CEO, doesn't matter, and why? Why did it make your favorite list?
So my favorite story. So in the Pardot offices in 2011, there was an entrepreneur that I tried to recruit to be one of our sales leaders, Kyle Porter. And so Kyle said, hey David, I don't want to join Pardot. I want to start a new company. Let's call it Sales Loft. And so the first product that we worked on together was around job change alerts, and it failed. It was a nice to have, it wasn't a must have, it wasn't 10x better. The second product was a way to take information off of LinkedIn, we'll call it a LinkedIn scraper unofficially, and take that information off LinkedIn and make it actionable, make it so you could call them and email them and do other things with the data. So we might or might not have gotten some letters from somebody that might have thought they owned that data, told us to stop. But we had $7 million of revenue from this thing that we knew had to die as quickly as possible for a variety of reasons, but the main reason was this publicly traded company who was against it. And so with $7 million of revenue, Kyle decided to go all in on a new product that would orchestrate the sales process. Right, so Salesforce.com is really a database to store information. It's not a sales engagement engine. It's not a sales execution engine. And so to Kyle's credit, he went all in on building the Cadence product, which is now the SalesLoft platform. And the timing was right, the team was right, the existing customer base of the previous product was right, and the rest is history. Now the company is one of the fastest growing companies in Atlanta, employs 500 people, has raised over 100 million of venture capital, and is going to be one of the major success stories for our region.
So I've got one that's in a boring B2B software space, and I looked at it. Other investors in Atlanta told me it was a boring space, and that's QA Symphony here in Atlanta. QA software changed dramatically because the development side went to agile development, and the legacy QA software that sat in Hewlett Packard mostly as the biggest competitor hadn't moved. It was under the old waterfall scenario. So I watched the company, and I was like, I'm not sure we're going to invest in QA software. They came back in, they'd done more than they said. Finally, the B round, we came in, and that company took off. A lot of great people, some from David's former company that were a part of that. But it continued to reshape an industry around how you QA development, embedding QA into the development cycles versus, hey, QA happens at the end of the cycle, and you show up to your executive meeting and say, hey, I'm a quarter late, and half of what you said I said was going to get done didn't get done. They changed the way QA is done. So even though it's a boring space, and it took me a while to go, am I really going to do this? It turned out to be one of the more fulfilling things to watch. It's been a great company in Atlanta.
What's that? Oh, stop. Can I tell my story or no? Sure.
5 minutes to the next one.
Okay. Yeah, so my favorite story is Republic Wireless. I joined their being executive to start a small and medium business wireless company. That was not very exciting. We hacked an Android phone. We had 500 in inventory, but we took 20,000 orders on our first night. And so began this race to actually get the inventory to scale up that phone. We had at least 3 points of failure, and that came back every time. And now that's a company that's doing $200 million in revenue. Unfortunately, I started inside of another company and needed to get out and become a founder. But those types of, as Joe Biden says, get up. As an entrepreneur, those are my favorites. Like Kyle, so I love that story of his.
All right, thank you all. Thank you. What a wonderful panel.